Got Aditya Kumar joining in. He's the founder and CEO at Niro. Thank you so much for taking time out. So let's talk about the latest fundraise, the Series A round that you have raised, and who are some of the investors, who is the debt capital as well been funded by, and what's the total?
Hi, Avanne. Thanks a lot for having me. So as you correctly said, we did an $11 million raise. $8.5 million of that was equity. $2.5 million was venture debt. The equity investment came from Elevar Equity, our existing investors, as well as a consortium of Japanese investors led by GMO Venture Partners and Rebright Partners. The venture debt was funded by Innovent Capital, one of the largest venture debt investors in the country.
So previously as well, there was a fundraise in the month of October. That was the seed funding round. So walk us through, the total funds that have been raised. Any picture that you can share with us as well when it comes to valuations of Niro?
Sure. So as you're correct, we raised our seed round, which was a $3.5 million round in October of 2021. The A round, which was announced, was in April of 2023. So approximately 18 months lapse between the two rounds. Outside of that, we haven't raised any capital. So both the equity rounds put together bring us to about $12 million of equity capital, in addition to the $2.5 million of venture debt, which was recently raised.
All right. Moving right on then, let's also discuss what you will be using these funds for. Are you looking to expand your footprint? What's the outlook in terms of your product offerings? Will there be a lot of focus on tech?
So just to put it into context, since we raised our seed round back in October of 2021, we launched our business, which is an embedded credit business that enables large consumer internet platforms to become and be fintechs through primarily competitive and frictionless credit distribution. Since our launch in January of 2022, in 16 months, the company today originates 60 crore rupees of loans a month, has cumulatively originated over 300 crores of loans in 16 months, and is at a $4 million annualized revenue run rate. With the funds that we've raised over the next 12 to 15 months, the aspiration is to grow from 60 crore rupees of monthly originations a month to 150 crores of monthly originations, to grow from a 300 crore AUM to close to a 850 crore AUM, and to grow from $4 million annualized revenue run rate to almost $12 million of annualized revenue run rate. In terms of specific areas that the fund will get deployed into, product and technology are front and center, in addition to risk management and our analytics and data capabilities.
What's the outlook then in terms of your incremental revenues that you are generating at the current juncture? Are you profitable?
We are profitable at a unit level, which means that for every loan that we fund, both in terms of the acquisition costs, our operating expenses, as well as any other expenses associated with the origination of that loan, we make money on the very first loan that we originate. Profitability will come in over the course of the next 18 to 20 months as we get to the desired scale that we plan to, primarily using the funds that have been raised as part of our A round.
I just want to understand, given that there are a lot of other players as well within the fintech space, are you worried about competition really heating up, and how are you looking to retain market share?
That's a great question. So I think, look, competition is a function of two sides of an equation, which are how large is the market and how many players are there aggressively going after that market. As it turns out, in the sort of consumer lending fintech ecosystem and or the embedded finance ecosystem, there are actually a medium number of players that are going after a relatively small market of high income prime consumers. If you look at the overall market in terms of where demand exists for consumer credit across income spectrums, across the type of employment that people have, across various geographies, across various use cases, there are very, very, very large and very fast growing segments of the market that are either unserved or, if not unserved, underserved. So I think competition exists in certain areas of the market. It's not something that's, is not something that we worry about today, at least. and especially in terms of the large underserved and unserved parts of the market that Niro is able to cater to through embedded distribution.
So what's the game plan then down the line in terms of the kind of partnerships that you currently have, and who are some of the other partners that you're looking to onboard?
So we're a two-sided marketplace, which means we have partners on the demand side, which are our consumer internet platforms that we work with, as well as partners on the supply side, which are the lenders that we work with. On the demand side, we currently work with platforms like Snapdeal, Housing, Quicker, to name a few. And on the supply side, we work with lenders such as Muthoot Finance, L&T Finance, IDFC First Bank, and a couple of others. Today, we have about a dozen partners combined across the supply and demand sides of our ecosystem. The plan over the next 12 to 15 months is to take that to both larger consumer internet platforms on the demand side, as well as larger balance sheet partners on the supply side. That number of 12 across supply and demand would likely grow to about 25 over the course of the next 12 to 15 months.
So since your launch, how much worth of loans have you dispersed across how many cities? And if you could just walk us through the overall run rate.
So we have since launch disbursed over 300 crores worth of loans. These have been disbursed across 14,000 pin codes in India. And we have grown from zero in January of 2022 to a 60 crore monthly origination run rate in April of 2023. And this is pegged to grow to about 150 crores a month within 12 months from now.
All right. And what's the long-term game plan? If you could just walk us through what you're penciling in for the company.
So the idea is to get to $1 billion book in the next 24 to 30 months from now. That would make us in the construct of our current business model and with a few additional product enhancements that we have planned for the next 18 months. That should render the company very profitable. So we should be generating a significant amount of surplus at that point from a PBT point of view. Assuming we can achieve that, then I think the world is our oyster. And given the sort of expectations on demographic dividend, given what's happening in the overall sort of macro, and with the explosion of the Indian middle class, I think there is significant room for Niro to become an extremely valuable player with time to come.
Let you go on that note. Thanks so much for joining us and giving us a view on how business is shaping up.
Thank you.